Wall Street has seen several key downgrades in the last week, most notably Tesla and Alphabet. The EV maker faced three big downgrades, with Morgan Stanley, Barclays and Goldman Sachs all providing a fresh take on the Elon Musk-run company. And Alphabet also got hit with an analyst call this week after UBS downgraded the tech giant. But despite these bearish calls, one thing stood out that could be confusing investors: a price target hike. Yahoo Finance's Jared Blikre joins us now to explain. Hey, Jared.
Hey, Rochelle, and maybe a little bit of a non-intuitive head scratcher here. Let's start with Tesla, and this is the analyst's entire stock history of calls on Tesla going back to just before the pandemic in 2019 there, and you can see that initial call was a hold. This purple line is Tesla's stock price, and this cyan line is the price target put in by the analyst, and you can see as the price moves higher, the cyan line, that is a price target, is moving along with it, and that is done by the analyst until we get up to this top here and we start stair-stepping down. And at that point, we also notice a stair-stepping down in the analyst target here. But something happened this year. It's been a little bit more difficult to predict. You can see they raised the price target, then they lowered it, and then we had this huge rally that most people did not expect, and we saw the mega caps really rally. Tesla was one of them. We got a huge gain in May, and so the analysts saw that. They said, we saw the pricing environment right now. I'm going to get to the note in a second, but price has finally come up significantly, and we're going to adjust our price target accordingly. Now, they have put a hold on it, so it's no longer a buy recommendation, but they're not saying sell. So if you've already bought it, sit on some profits here and just kind of wait it out. Also, they get to lock in their price target, which has been reached now. So let me go to the analyst note, and I see this as a little bit of a mea culpa here by Goldman Sachs, because most analysts really did not anticipate what was going to happen this year. And so let's take a look. We're downgrading Tesla shares to neutral from buy, as we believe the stock now better reflects our positive long-term view of the company's growth potential and competitive positioning. This is after post the substantial move higher year to date up 108%, and in the last month 38% versus the S&P's 5%. So basically prices come a little bit too far too fast, and then we're going to step back a little bit, because while the primary reason for the change in our view is that we think the market is now giving the stock market more credit for its longer term opportunities, talking about the price once again, we are also cognizant of the difficult pricing environment for new vehicles, get into some margin talk there, but regardless of how you feel about the EV opportunity here, they're saying they like to stand back for just a second here and kind of reassess. And we're seeing a very similar thing going on with Alphabet. So here's Alphabet, there we go, Alphabet. Similarly, we have the stock price in purple here, we have the analyst target price in cyan. This analyst started out with a buy in 2019, and you can see the price target basically moving higher until price starts moving lower, then it follows the price down. And finally, we saw this surge of price up to meet the analyst target. And at that point, the analyst takes a call, the buy call, off the table and says, hold, sit on those profits there. And they do get that notched as their specific return. There is a buy down there, a hold down there, so they can just lock that in. I'm going to go to the Alphabet note, and we're going to see something very similar here. I think this kind of speaks as to the earnings season and the macro environment we're in. Difficult to play here. And here's what we're seeing. It's difficult to see our upside given the current high single-digit sites growth estimate and consensus calls for acceleration, et cetera, et cetera. They talk about the huge price run-up and also the fact that they like Meta and Amazon, so maybe go fishing somewhere else right now. But the bottom line is the call, the actual recommendation by analysts, a little bit different than the price target, and they can use both of those to send the messages as they deem appropriate to investors. Rochelle.
Fantastic breakdown there, especially for people looking at these high-tech spaces and wondering how to play it. Thanks so much. Our very own Jared Blikre.